Hey everyone, this is June from Turning Point Life Investment, and this video is for the week ending September 13th, 2008. And as always, we start off with a weekly view for SPY. Nothing really much has changed from last week. We did produce a small little dark candle to follow this large one here. Basically, it just means that there's a little bit of a slowdown in the bearish momentum for this week. Volume definitely picked up for this week. There's a lot more activity going on. And partly that was due to traders coming back from the summer. Once again, we are still underneath the 20 and the 50-week moving average. Resistance, as far as a weekly view is concerned, is right here above 132. Support is still at 120, and we came pretty close to testing that this week, but we're not there yet. So we're more or less basically in the middle of the range right here. So not until we are able to trade above here can we say that the downtrend has ended, right? Because while we are creating a series of lower lows, and then we have lower highs, but yet we have yet to create a lower low. So, we are still in the process of making this downtrend. But if we are able to trade above here, then that no longer is a lower high. Now we have a higher high relative to this one. So, to say that we've reached the bottom right here, it's a little premature. Okay, so there's still bearish momentum towards the downside. We just gotta wait for it. Going into a daily view, now if there is one word to describe this week, I'll have to say it's volatile. For sure, you have very large down days and very large up days. Basically, that's very emotional trading. You have traders basically reacting to every little piece of news that's out there. Now, obviously, on Monday and Tuesday, we had the sell-off, basically the sell on the news with the Freddie and Fannie Mae rescue plan. And usually that typically more or less happens when news come out during the weekend. It gives time for traders to digest the information, so they get to sift through all the info and basically decide whether, well, this is truly bullish or bearish kind of news. So it's different when a news come out in the middle of a trading day. It basically catches people off guard, and it has more of a surprise element, right? And that's where you get strong the rallies or the strong sell-offs because of that. It's the surprise factor. Now, even though we've been choppy all week, we are still underneath this 50-day moving average, which is critical, right? Because we know that not until it's able to trade above it can we say that the momentum has shifted. But even though we have a couple of the last 2 days were pretty, pretty good on the rallies, we didn't really trade above the 20, as you can see here, right? We actually closed on Friday right underneath the 20-day moving average. So the market basically has its head bumped up right against resistance, especially right around the 126 area. So we'll see exactly what happens on Monday. If Monday produces a small candle, then that basically sets up for a bearish reversal. If on Tuesday, Tuesday is the FOMC meeting, so if Tuesday produces a large bearish candlestick, then you have basically a reversal candlestick in the making right there. So, but that's something to look out for. Now, in the grand scheme of things, I see two possible scenarios for this market. For those who follow Elliott waves, usually corrections are in three waves, right? We have first scenario is either this is the first leg, this is the second, and then we have one more larger leg that basically can come up to like maybe 133 area, and that would finish the three-leg correction. The second scenario is we basically finished correction already. This is our first leg down, and right now it's just correcting this first leg that dropped right now. And once this correction is done, we'll continue lower, right? At least in my mind, those are the two best outcome for this market right now. As for myself, I'm leaning more towards the second, meaning that we are basically done with correction and we've started the next leg down. Only because, I mentioned like a month ago, this decline took roughly 2 months to create. And this correction right here, this previous correction, was about a month and a half. So there is somewhat of a harmony already established right there in terms of time, right? So if we get another leg of correction, that basically would put us up into probably to October. So you're talking about 3 or 4 months of correction with only a 2 month of decline. So that's not very, in terms of harmony, that's not very harmonious, right? So even though as irrational as the market can be, it has to be. It does in some sense make harmonious sense, right? I guess you can say it's irrationally harmonious, right? Some kind of oxymoron like that. And lastly, we go into the hourly view. Hourly view, you notice we established pretty good support right here at 122. We are on a short term making lower highs. And we do have some kind of uptrend resistance in progress right here. But nonetheless, we did close above 126 barely by 9 cents. And after hours are down. So we'll see if this was a head fake rally into the close. All right. As far as immediate resistance, we obviously have 128, and immediate support is at 122 and ultimately at 120. If 128 breaks above, then we look towards the 131 area as the next level of resistance. Going to the daily view of the VIX, the only thing that the VIX is telling us is that we are having an uptrend in the VIX, meaning that there's definitely more fear in the market right now, which translates to a downtrend in the S&P. We're not exactly at an extreme level, meaning anything above 30 would be considered extreme. So how does this translate for option traders? Well, when the volatility or implied volatility is low, that usually means that the premium is relatively cheap. As IV, implied volatility, goes up, your option premium goes up as well. So what this means is that when IV is low, it's actually a good time to be an option buyer. Why? Because it's relatively cheap. When it's high up here, when IV is high up here, that means the options are relatively expensive, and that is usually when it's a good time to be an option seller or option writer. So, trading options, it's a completely different ballgame than trading stocks. I've encountered people who traded stocks before, and they transitioned into an option trader. They were pretty successful as a stock trader, but they were losing a lot of money as an option trader, only because there's a lot more variables that affect options, such as time and volatility. And unfortunately, these people were trading options like how they were trading stocks. So, the thing with options, it is a lot more complicated, but the reward is definitely there. You have a lot more versatility and leverage with option trading, but the amount of knowledge that you need to know is definitely a lot more than stock trading. So my suggestion for all you option traders out there is to really know your options, really know the Greeks, especially because that's really the inner workings of options. They tell you how time and volatility and price movement affect your individual option. Before, when I first traded options, I didn't really know anything about the Greeks, and I bought options. My stock went up, but yet my option basically lost money. It's because I had an implosion in volatility, meaning the volatility dropped so much that it actually offset the rise in stock price, right? It's stuff like that you don't have to worry about as a stock trader, but as an option trader, you need to know this kind of stuff. So anyway, going back to let's look at the chains. Our open interest for the front month, option expiration is next Friday, so there's basically 5 more days of trading left. If we do get the rally, this is the call side. The one that stands out is the 130 call, so look for some kind of resistance around the 130 call if we continue on with the rally. And on the put side, as far as support, we do have basically a whole cluster of support. So I don't know how relevant this is, basically from 125 down. But obviously the one that still stands out is 120. I would probably say back around 124 will be probably the next good level of support. And obviously from our charts, we noticed that 122 was good support as well. So anyway, just to recap, we are still underneath resistance. Okay, you can't deny that fact. Even though we had 2 days of rally, we are still trading underneath resistance. Okay, let the charts tell you what the market is doing, all right, not what you want it to do. So we still are here. If there's any failure under this 20-day moving average, there's a good chance that we will test 120 again. And if I was trading this market, any failure here at that point, I would probably go in for some bearish trades.